Good morning. It's Jeffrey Christian of CPM Group. It's about 10:50 here in New York on Friday, the 22nd of November. Gold is trading around $2,696. It broke above 2,700 and got to 2,712 earlier this morning, retracing a substantial portion of the decline that we saw from the 31st of October into the 14th of November. Silver is a little bit over $31. Platinum is around $971, up barely on the day. And palladium's off about $22 at $1,022. I want to talk today about the risks that the world is facing and therefore the financial markets. And this is something that's been really driving investment demand for some time. Probably always drives investment demand, and there are a lot of issues that are there. We're looking for higher prices over the course of the last week of November, next week, and into December, and into the first quarter. And we're looking at those higher prices predicated on our view of a heightened degree of concern by financial markets and investors about a wide range of risks that they're facing. We saw gold prices rise sharply over the last week, having fallen sharply from a record high of $2,801 on the 31st of October. They fell into the 14th of November, and since that time, they've been rising. The view that we see in the market consensus is that it was really profit taking, and it was spread across commodities. It wasn't just gold and silver. It was gold, silver, platinum, palladium, aluminum, copper, oil, natural gas. So it didn't look like it was economic euphoria over the election results. It looked like it was shorter term profit taking following several months of consistently higher prices. There were a lot of risks and a great deal of uncertainty as to what the U.S. election would hold and bring forth. Those risks and uncertainties disappeared with the election, but a whole new set of risks and uncertainties have appeared. CPM Group had written in its Precious Metals Advisory at the beginning of November that it was too early to really say what a Trump presidency and a unified Republican government would mean. We laid out several issues. One was the internal inconsistency in what the Trump group was saying that they would do and what the effects of that would be on the country, the political environment, international affairs, and the economic conditions, both in the United States on a global basis. You can argue, based on some of the things they've said, that you could see a sooner, deeper recession than has been expected over the next year, that some of their policies could bring a recession on sooner. But other things that they've been saying suggest a more stimulative economic policy that could protract the current expansion into well into 2025, if not even beyond that. So it's just too early to tell. Another set of factors that we said you needed to have resolved was what the Biden administration would do between the election and Inauguration Day. And we've seen some dramatic moves on the part of the Biden administration, and there probably could be some more in the next 6 weeks. Actually, it's more like 10 weeks till the inauguration. Another factor is the fact that there are other players, other actors on the world stage and in the domestic stage, and you don't know how China is going to react during this interregnum period, much less after Trump assumes power and the Republicans take control. You don't know what's going to happen in the Middle East between Iran and Israel. There are different scenarios that people are playing out. There are increased tensions between Russia and China. There's a lot of uncertainty there. As a result, gold prices have risen back since they hit their short-term low last week. Silver prices have recovered also. They had sold off into the 14th of November. They've come back, but not as strongly as gold. And platinum and palladium have been very volatile in a way similar to silver. They haven't risen back as strongly as gold, and they're also showing more proclivity to declines. And I think part of that has to do with economic concerns about recessions. There are, I guess, four pillars of things to pay attention to right now. The political factors, which I mentioned. There have been change in the activities and actions in the Russian invasion in the Ukraine. The Biden administration and the Western Europeans have allowed the Ukrainian government to start defending itself more effectively than they have restrained it from doing for the last 3 years. And the internal issues within Russia have become more poignant and critical. There is a lot of political dissent within Russia, and the actions of allowing the Ukrainian army to use some of the advanced weapons that they've been restrained from using has perhaps heightened the domestic dissent and tensions within Russia. So it's hard to say. Obviously, U.S. domestic politics have been a hodgepodge of strange things and heightened uncertainty. And there have been other developments around the world, and there will continue to be. Economic factors also have been in there. There are clearly increased recession concerns in the United States, Europe, China, and other countries. The Federal Reserve Board, the ECB, the Bank of England, the Bundesbank, the IMF, and mainstream economists who actually know what they're talking about have been sounding alarms that the decline in economic activity has heightened the risk of a recession. And fiscal and monetary policies need to respond. It's hard to say that fiscal policies will respond in the United States, given the fact that we're in this interim period between the election and the change of governments. It's hard to say what's going to happen with the Republican Party controlling both the presidency and the Senate and the House. So there are a lot of economic factors, really around the world. Fundamentally, investor demand for physical gold and to some extent silver remains very high. Additionally, and I'll show you some data in a minute, high open interest in the December COMEX and NYMEX gold, silver, and palladium futures, all of which become deliverable next week, probably on Wednesday because of the Thanksgiving holiday. And the Thanksgiving holiday and the fact that the market probably will be open on Friday, but a lot of people will not be participating in it, means that it will be relatively less liquid on that first delivery day for those December contracts. And technically, there are positive price actions over the last week that technically oriented investors and traders will pay attention to. And insofar as the short-term price is very heavily influenced by futures and options trading, probably more than 90% of those trades are generated by technical analysis, many of which are generated actually by computers without human interaction. This is a chart we use in the Precious Metals Advisory. This is the version that we used in early November. And the bubbles, the green balloons, are things that are positive for gold prices, negative for the world. You can see that big one up in the upper right-hand corner says political risks. We have been saying that the political risks that the world has been facing, the U.S. has been facing, and continues to face, have taken center stage this year. Sort of muscling out economic concerns, although those economic concerns are definitely there. The red bubbles, very few of them, less likely to be impactful, if I may use that non-word, and also a little bit less probable to emerge, given the uncertainties, are few and far between. We actually break that down, and I won't bore you by reading this. You can pause the YouTube video and read it. There's a tremendous number of risks. This is derived from the data that we and probabilities that we have in this chart. These are just some of the factors that we're watching that are causing investors in financial markets to say, this is a riskier place than we've been for a long, long, long time. And probably makes sense to own some gold and silver, given all of these political and economic risks. They're all there. They're all prevalent. They're all demanding attention. I mentioned the open interest. This is the data on open interest in the December contracts for silver, gold, and palladium, and the platinum contract for January. January is the actively traded month for platinum. But we are coming into the first delivery date for the December contracts next week. And you have open interest as of yesterday at 268.8 million ounces in silver. That compares to about 308 million ounces total reported stocks, of which about 70 million ounces were registered with the COMEX, and another 239 million ounces were eligible for COMEX delivery, but not actually registered with the COMEX. With gold, you have a similar relationship, 19 million ounces of open interest as of yesterday, and 17 million ounces of total inventories. And with palladium, you had 779,000 ounces open interest for the December contract, compared to 38,000 ounces of total inventories. And you can see, unlike with in gold and silver, most of the metal is held in eligible inventories, and registered stocks tend to be less. And you can move it back and forth with a click of a button on your computer these days. You just simply deliver the delivery notices to the COMEX or clearinghouse. With platinum and palladium being more industrial metals, less liquid, less invested, you see that the registered inventories are larger than the eligible inventories. That reflects their more industrial nature. It also reflects the increased volatility, and it reflects the extent to which the inventories are held by commercial entities that are hedging their exposure, downside and upside, mostly downside, through the futures and options markets, using their registered inventories as collateral for that. We think this could contribute to gold and silver and prices rising again through next week. We wouldn't be surprised to see another spike, a third spike up in palladium prices. Once we get into early December, it is possible that the prices could come off from where they are today and where they may be next week. That will depend on what's going on politically and economically around the world and in the U.S. political transition. And we have no idea what those things are going to be, but it looks like the risks and the perception of the importance of those risks will probably be higher in December than they are today. That's all I have for now. Take care of yourself. Take care of those around you. Have a good and productive weekend, and try to do something good for the world.